Hey, what's going on, guys? Austin the Money here. We did it. We hit $150,000 in the portfolio. Huge, huge goal. Very grateful to be in this position. It's official now because all the contracts have closed out and these are realized gains. I'm going to go ahead and get into how we did for the week. This was my best week ever. So we are up $4,100 this week. We had Google puts that expired, got 100% of that premium, 432. Our Netflix in the money cover call strategy worked. We made 567 off of that. If you guys watched the last video, I did an IPO trade with Bullish. Got in and got out within 6 minutes. Made $3,000. I bought back this Google put so I could actually have some capital to make this trade. So that's why I only got 61% of the premium here. Still a gain. And SoFi puts made $36 off of those, bringing us to a little over $4,100 on the week. That is amazing, guys. The month we are sitting at $10,000. 3 months we're sitting at $22,000. And year to date, $20,500. So I started this in the money strategy. I think one of these two. Yeah, it was right here. This was the first strategy. And ever since then, we have been very, very profitable. No swings, no bad weeks. It's been awesome. But I must say, I am getting a little skeptical of this market. We kind of brushed off the PPI data that we had. This data was awful. I mean, it was just terrible. And the market just didn't seem to care. The market actually had a green day. This data came out August 14th. And if you go over here to August 14th, we had a green day. So makes 0 sense. PPI data is, for you, those of you who don't know or don't keep up with this, PPI data is the producer price index. These are your wholesalers. This is like, Walmart, Costco's, all your companies that sell to you. CPI is consumer price index, which is the inflation that me and you see. So inflation usually hits the producers first, and then they choose if they want to eat some of this inflation and not pass it down to us, or if they choose to pass down, half of it or all of it. So this is the start of, feeling the tariffs, right? It takes a couple months. The data lags behind a little bit, but tariffs hit in April, and this is the July PPI data. So CPI came in relatively cool. Core CPI was slightly hot, 0.1% higher than they expected. But PPI, this is where you start feeling the pain first. This came in absolutely big miss. We were expecting a 0.2% gain, came in at 0.9%. This right here just goes to show you that even the people that this is their main job have no idea what the tariffs are going to bring to us, right? They have no idea how this is going to affect inflation or, a lot of stuff. If they missed, this is what? A 350% jump from what they were estimating, 0.2 to 0.9. Huge miss. Absolutely huge miss. Core PPI rose 0.9%. They were expecting 0.3%. So, biggest gain since March of 2022. And that's when inflation got really out of hand and we had a bear market. So I'm not saying that's what I'm expecting. I'm just saying it's kind of weird that we brushed this off like it was nothing, right? This is the first sign, the first bit of data that's coming from the tariffs. If September, we get our next data September 10th. If that data comes in hotter than expected, that is 2 consecutive months of rising inflation, which is not good. Not good at all. And then after that, the CPI could begin to fill it. And everyone just kind of seemed to be focused on this rate cut that we're supposed to be getting in September. That's kind of like the only thing people are worried about is this rate cut. So let me go ahead and break it down for you. we battle inflation with rates, right? If inflation starts to go up too much, the Fed raises rates to limit our spending so that it's basically a supply and demand, right? If there's 100 iPhones and people want to buy 150, they have to raise prices on the iPhones. Well, when you raise prices on the iPhones, that brings up inflation for iPhones specifically. And obviously this works with everything in the world. But they want people to buy less stuff so that they can keep the prices down. Okay, so if we get a rate cut in September, while inflation is going up, we're just adding fuel to the fire. Because that's not how you combat inflation. You want to either keep rates the same or raise rates to combat inflation. But since the CPI hasn't felt the pain yet, the Fed will most likely cut the rates. But I believe that if this is high again in September, on September 10th, when the August data comes out, I believe when the October, like around October 10th to 12th, whatever the data comes out for September, I believe that CPI data will be starting to come in hot. And then we could be in trouble, right? If this is temporary, this is just a one-time hit, and then after this month it cools off and goes back down, that would be amazing. That would be very beneficial for the market. 100% back on the bull market train. But if this data continues, then, I'm going to be careful with my trades. I'm going to be a little bit more conservative. Instead of shooting for that 1% a week or even 0.75%, I might just shoot for 0.5% a week, maybe 500 to 600 a week, just because I want to hedge myself a little bit more, right? I don't want to get stuck bag holding at the beginning of a drop. I don't mind bag holding if we've already fell, 5 to 10%, but I don't want to get stuck bag holding at the very beginning of a drop. I'm trying to have cash available if we get a 10% dip to take advantage of that. If the VIX spikes, to take advantage of that. So I will definitely be leaving some cash on the sidelines, maybe just collecting that 4% APY that Robinhood offers. But my trades will definitely be a little bit more conservative now, at least until September 10th, when the new CPI and PPI comes out. So we're doing pretty good. Since I've been tracking this, since May 2nd, we're up 25,000. I broke even on June 1st, so everything June forward is pretty much where I'm profitable at, like my realized profits. But so far, 3 weeks in August, we have already beat July at $8,500 or 6% return on the portfolio, which is insane to me. Have no idea if I'll reach 10,000 this month, but regardless, that's insane. And I definitely want to protect these gains, right? I don't want to give it back to the market. I don't want to, work and really focus on these trades just for the market to start, dipping and I end up giving this money back. The last thing, I want to protect my money. So if that means make a little bit less every week, but it makes my, I have less anxiety, I'm not super worried about it, that's what I'm going to do. It might not be the most entertaining thing to do, but my main goal is just to protect my money. So if you're looking at S&P, we're back at the top of the Bollinger Bands, got rejected a little bit from the top. RSI is at 65. It's a little high, not overbought yet, but we are approaching those levels. S&P has been riding the top, bouncing off, riding the top, bouncing off, and maybe it continues to ride the top. I don't know. This market is very stubborn, and it kind of just goes up. And that's where you should kind of start getting fearful, right? Everyone's really greedy in this market. Everyone is greedy. Warren Buffett has been stockpiling his cash. Not saying I'm a huge fan of Warren Buffett, but I'm just saying, he's kind of predicted the 2000.com bubble and the 08 housing crash. He had records amount of cash right before both of those happened. So you know, who knows what's going to happen. I'm just going to start playing a little bit safer. Maybe when the VIX bounces above 20, I'll feel a little bit more comfortable getting into some positions. But what I'm really looking for is a spike like this. Really looking for a spike. That's when I'm going to go all in on the portfolio. Usually spikes like this mark a market bottom. Okay? So if you get spikes, anything above, I would say probably 40 to 50, it's marking the market bottom. This was the market bottom right here when the VIX spiked to 60. And then what does it do? It comes right back down. So I'm going to be looking for days. This is mainly what I'm looking for. I mean, this has happened in the past. The August 5th, same thing. VIX went to 65, came right back down. That was the bottom in August right there. So that's what I'm looking for. VIX is very low, and it could keep getting lower. We could keep going up. But I'm just going to play a little bit safer from here on out. But I got to show you guys one more thing. Oh, never mind. I'm not going through all this crap. All right, guys. That's the end of the video. I appreciate you guys if you made this far, and peace.